What is workers' compensation insurance? Workers' compensation insurance, or workers' comp, is a type of insurance that helps employees by paying bills associated with a work-related injury or illness. This can include the cost of hospital care, surgery, doctor visits, physical therapy, emergency room visits, and prescription medication. If an employee is unable to stay at work or return to work, replacement income can be provided. Workers' comp requirements vary by state, but most companies that employ even one person must have coverage. Some states even require businesses that use independent contractors to have workers' comp to cover them. Employers enjoy many benefits from workers' comp, including fewer high out-of-pocket business expenses and compliance with state laws, which helps them avoid fines and penalties that can be levied if they fail to secure coverage, even if they have never had a reason to file a claim. In some cases, the client of a business that has workers' comp may require what's called a waiver of subrogation. This waiver means that the insurance company agrees to give up the right to recover damages if it's determined that the client or one of its employees was responsible for the incident. A waiver can be specific, meaning it names a specific company for whom the insurance company is relinquishing the right to recover damages, or blanket, meaning it covers all companies with whom the insured has a contract. The premium that a company pays for its workers' comp insurance is calculated as a percentage of its annual payroll. In buying a policy, a company estimates its payroll for the coverage year. Then, at the end of the policy period, biBERK performs a payroll audit on documents that the company provides. Based on the results compared to the initial estimate, the company may be required to pay more premium or get a refund. In addition to a company's payroll, there are other factors that affect their workers' comp rate. One is what's called classification codes. Governing class codes are assigned to companies based on their industry, while companion class codes are assigned to employees based on the type of work they do. Insurers use a standard set of 3 or 4-digit codes assigned by either a state rating bureau or the National Council on Compensation Insurance, NCCI, depending on the state. These codes reflect the level of risk associated with the type of company and the duties of its employees. It's important that the right classification codes are assigned, as getting the wrong codes can mean the company owes a significant amount of additional premium at the end of the policy period. And it should be noted that intentionally misclassifying workers is considered fraud and can have serious consequences. Another factor affecting a company's workers' comp costs is called an experience modification, or MOD. This is a rate adjustment based on the company's previous claims, as compared to other businesses of the same size and scope of operations. Typically, a business must be in operation a minimum of 3 years and have generated sufficient premium in a single year for a MOD to be assigned. In general, a MOD less than 1 is better than average and earns a credit, while a MOD greater than 1 is worse than average and earns a debit. Workers' comp from biBERK includes a loss control program that provides videos, workplace postings, and managed care in the event of a claim. Keeping claim costs down helps keep an employer's MOD down, which in turn allows them to receive a better rate. Regarding coverage requirements, there are exceptions to the rule that companies have to provide workers' comp for employees. For instance, coverage is typically optional for business owners and officers. Independent contractors who do work for a company are another gray area. Many states require that companies ensure the contractors they work with have workers' comp. And while contractors may have their own policies, companies must keep proof of the contractor's insurance on file. If they fail to do so, the company's insurance provider may charge them for workers' comp coverage on the contractor's behalf. Workers' comp coverage also has certain limitations. Injuries that occur outside of work, intentional injuries, and those that are the result of substance use or intoxication are a few examples. biBERK offers workers' comp in all but 4 U.S. states: Ohio, North Dakota, Wyoming, and Washington. These are called monopolistic states, and each provides workers' comp through its own government-operated insurance fund. Workers' compensation insurance can be purchased in minutes at biBERK.com at a rate that's up to 20% less than policies from other companies. And our licensed insurance experts are always happy to help answer questions about the coverage. Workers' compensation insurance, financial protection for businesses and their employees that also provides powerful peace of mind.